And mind you, projects like power plant of a scale of 1,000 megawatts and beyond require a different skill set. It's not everybody's cup of tea.
When we look at other industries, there are clear winners, there are losers, there are, these guys have this moat, and these guys have this moat. With power, it seems like if you can build the capacity, you can manage the regulation, you can sell it.
That's right. But what will happen in this segment is that these companies will have volatility in earnings. So the quarters in which power plants get commissioned, you will see a spike in profits. Then it will again stabilize. Then if there's some government regulation, some curbs on pricing, then it will come down.
Does this sector and do these stocks have a place in the portfolio for long-term investor? Or is this more for an active trader kind of a space?
Traders would love this stock because there's volatility in earnings, there's volatility in government policies. And these companies are all the time in the news announcing projects, discussing the progress. So yes, great for traders. But from a long-term investor's point of view, entry price is important.
Hey guys, thank you for joining us for the 48th episode of our podcast. We're here with our returning guest, Mr. Deepan Mehta. And we've covered a great many sectors over here in this podcast. But one sector that I've actually been very keen to cover for a long time is the power sector. And I'll sort of broadly outline why I'm so keen to cover this sector. First of all, I think we've hit a really interesting threshold in the economy where we've hit like 99% electrification. So everybody in the country now has access to electricity, something that wasn't true 5 or even 10 years ago. And the level of electricity consumption is going up rapidly. If we look at the sales of white goods, things like ACs, washing machines, refrigerators, that's growing really rapidly. And obviously all of that relies on electricity. And at the intersection of that, we have a huge disruption from the technology sector. I think 60% or so of India's installed electricity capacity is coal power plants, but 40% is renewables. And going forward, the unit economics of renewable energy favor solar and wind much more so than coal or gas or nuclear, even for that matter. And that creates quite an interesting scenario for a lot of these power companies. And I wanted to get your thoughts on this sector as a whole, and then we'll get into some of the companies within that sector.
You're right. I think one of the hallmarks of the Modi government past 10 years has been the way they have gone after setting up power infrastructure. And actually now we have achieved almost full electrification, which was not there earlier. And truly the growth is coming from the rural areas where earlier there was using electricity just for one bulb or a fan. Now more and more appliances are coming on board. And that certainly the demand is exploding, so to speak, in those regions. And even in the urban and semi-urban usage of refrigerator, washing machines and ACs is really driving the growth for power. So from that point of view, it's a nice industry to be in from an investor's perspective because there are hardly any demand issues. And it's not a very cyclical business also because, consumption is pretty uncyclical, pretty steady. And it keeps growing at least at low single digit in volume terms for many, many years because India still has a long way to go in terms of industrialization as well as in terms of urbanization. So more you urbanize, the more you industrialize the nation, more the demand for power. So it's from long-term fundamental dynamics, it is a very good industry for an investor's perspective.
So one of the really curious features of this industry is that it's a heavy PSU presence. Most of the installed generation capacity is, by companies like NTPC or NHCL, NHPC, and a lot of more profitable companies like PowerGrid Corporation are all PSUs. But on the flip side, you have private players like Tata Power, Adani Power, Torrent Power, JSW Energy. So there's this sort of dichotomy here. And as an investor, how do you view this? Is there more opportunity in PSU or more opportunity in private? How do you view this PSU, non-PSU situation?
See, before I come to that, you said that it has got very high PSU presence. But what's also important to mention is that it's highly regulated. And the regulation also keeps on changing from time to time, depending upon consumer perception, depending upon the technologies coming into play, and also considering where the focus area of the government is. Sometimes they want to give a boost to wind power, then they will have some concessions there. Then they want to build on thermal power to act as a backup, then there's some incentives that are going over there. And there's a lot of planning which is done by the government to ensure that power is available at reasonable prices to the consumer, be it household or even a factory. And that in itself is a risk factor for the industry and an opportunity. Because when the regulation favors you, suddenly a lot of capacity comes up and they become extremely profitable. But when the government wants to put a cap on prices and what you can and cannot do, that's when the problems start to happen for the industry. So despite having good underlying fundamentals, because of excessive regulation, sometimes you feel the growth rates are kind of constrained. And again, to answer your question whether there's value in private sector or public sector, that keeps on shifting and rotating depending upon the public policy. For example, let's take NTPC, right, which is the first company. So NTPC was a laggard for many, many years. But now suddenly it started to do well. Why? Because the focus has come back into thermal power. And also the fact that NTPC itself is going into renewable. So companies are constantly evolving over here, and that's what causes a lot of volatility in their earnings. And therefore, difficult to say that today I may say I like PSU, tomorrow could be private sector, and the kind of list keeps on shuffling.
So just to sort of highlight this thing, because we talked about NTPC, and I guess we'll start there. If we just look at the price performance, this last year has been outstanding. It's been an 85% growth. But even before that, over the last 5 years, although I suppose a lot of that return has come over the last year, it's generated 19% compounded. So, I mean, a lot of the performance is quite recent, but it's performed reasonably well. And from a numbers perspective, it looks broadly quite nice, right? I mean, revenue's grown about nearly 12% compounded over the last 5 years. So as EBITDA margins are fairly stable. Return on equity is reasonable at about 11.5%. So picture of financial health, which I don't think was the case too long ago.
Nicely put, picture of financial health, but that you are seeing it just now.
Yeah.
Right. So yes, I think it has done well. Basically, under the Modi government, PSU shares and PSU companies have generally done well because a new sense of efficiency, urgency, and to an extent, corporate governance has been infused into these companies. And that's reflected in not only in NTPC, but across the board on all the PSU stock. Now, what has changed in NTPC over the last 2 years for investors to give this kind of a re-rating is, first of all, NTPC's aggressive expansion into renewable. So, there was this whole fashion about we want to buy into sustainable, eco-friendly companies. That entire thing was where NTPC lost it on because it's one of India's largest polluter. But the future of capacity expansion is going to be the renewables. So that changed the complexion of the NTPC stock and the perception in the minds of investors who wanted eco-friendly companies per se. So that is one thing which has changed, and that's reflected in higher P multiple. At the same time, now there's a fairly good realization that we need thermal and we need wind and solar all in tandem have to work better. Because sometimes something works better, sometimes something is more economical, and to have uninterrupted power at an attractive price and environmentally friendly, all three have to coexist. Earlier, NTPC was like, a dinosaur where everybody thought that, thermal power is going to lose its importance and no capacity will come up, there's no growth. But that thinking has changed.
So I just want to highlight the capacity figures. Of the total capacity that India has, about 430 gigawatts of peak capacity, NTPC has 73 gigawatts, some of its few subsidiaries, and they're building another 18 gigawatts of capacity. So almost a 40% growth on the horizon for NTPC. And the reason I point that out is because I want to juxtapose that with the valuations. So a year ago, they would have obviously been incredibly cheap, but they're even still only valued at 16 times earnings. So how would you view this stock given the growth as well as the valuations? What do you think about it?
See, at the end of the day, it's a utility company, and utility companies cannot be, treated as growth companies. So it's a value company, and people are realizing the value in it, and therefore the price has gone up. And I agree that a lot of expansion plans are underway, but there are always execution risks. So from that point of view, I would say that NTPC is something which has a lot of the discovery has been done. And from these levels, I don't know, whether you'll get a similar type of returns. And end of the day, it is in a heavily regulated industry. It is a PSU stock. It has got issues in terms of very large receivables from the power distribution, the discoms, the state distribution companies. It's a complicated company. And while it was attractive 1 year ago and the PSU rally, the stock went up, I'm not certain that you can make a fresh investment in NTPC at this point of time. You can remain invested, but it's not always that 10 years of underperformance, that kind of, keeps on playing in my mind.
Fair enough. So let's go into a completely different company. I want to talk about PowerGrid Corporation. So I'll be honest, I don't really understand what PowerGrid Corporation does too well. What I know from a textbook perspective is they have about 80% of the interstate transmission, and they're primarily involved in long distance to medium distance transmissions. But I don't understand much more than that. Can you shed some more light on the company?
That's it. You covered it pretty well. That they actually own the transmission towers and the transmission lines. And anytime you want to transport power from one state or one location to another location, then you have to pay a toll to PowerGrid Corporation. And because it is setting up these transmission lines, it is guaranteed a particular return from the government for investing its money. So basically, PowerGrid's financials are linked closely to the capex that it actually puts on the ground and setting up of new transmission lines. Because the more the capacity it sets up, the more there is power flowing through these transmission lines, and therefore they get a kind of a revenue generating model from that basis. But again, over here, a lot of private sectors have come into setting up the grid and these transmission lines. And some of the advantages which PowerGrid had in terms of bidding and in terms of what return on investment they were ensured, those are being gradually diluted. But it's a steady performer, again a utility company, and good growth prospects. But some of it is in the price, and you cannot expect explosive growth in a company like PowerGrid or NTPC, because end of the day, it takes time to set up these assets on the ground. And mind you, if some government policy changes over there, like what return they can get on the capital they're investing, or if something they have to do for ensuring that power is supplied at a cheap rate to certain section or certain location or area, then these companies will look at the broader benefit of the nation rather than just its minority shareholders.
Fair enough. So I'll just gently talk about the figures with PowerGrid because they're worth discussing. They're obviously, like you mentioned, revenue growth is driven by increases in capacity. Seems to play out with the revenues and the profits grown at only about 5.5% over the last 5 years compounded. Great margin business, but again, sort of very capital intensive, so we can discard that. The only thing that I maybe want to ask a question about is the return on equity seems to be really attractive at 18%. So is that to be believed, or is there something else happening?
No, it's true. It's nothing new. It was higher. It's actually come down a little bit. And it's typically because, it's got a lot of assets which are depreciated, because these are assets which have very high useful life. And from that point of view, the ROCE will keep on gradually remaining steady or going up. And as I said, that certain return on investment is assured for these companies. So it's nothing new, and it's been captured in the valuation ratio.
And again, just to close the circle on this, PowerGrid is also valued at pretty much the same level as NTPC at about 16. So it seems like these PSU power stocks have sort of moved in concert with each other.
Absolutely. Okay.
So let's maybe shift our focus to the private sector and talk about Tata Power. And just in talking about Tata Power, I want to highlight really one interesting thing. So the public sector players are receiving a valuation of 16 from a price to earnings perspective. Tata Power is receiving a valuation of 36. So what's going on? Because they're all still utilities. I get that there's a discount because, governments can occasionally stop caring about minority shareholders. How is Tata Power receiving such a premium?
So Tata Power is not just, it's present across the spectrum, right? So not only does it generate power, and that too generates power through thermal, through hydro, and through renewable sources. So it covers the generating part. It's also into distribution right at the household or the factory gates. So that's also another big advantage of Tata Power, and they're investing heavily into new age technologies and electrification for facilitating car charging of cars and
EVs, yeah.
EVs. Yes, so setting up full network over there as well. So it's a very busy company, and it's got its uh, fingers in many pies. And generally, people like the story around Tata Power. See, Tata Group per se, there's a high level of trust, and the company been around for a very long time, decades and decades it's been around, and it's managed the entire power environment well. It's gone through so many upheavals when it comes to regulation, and it's still survived. It's among the few surviving power companies in India. And from that point of view, I think people feel that when they want to invest in power, because of the fundamentals we discussed at the beginning of this show, they feel that Tata Power is a good fit in their portfolio. So, from an investor's perspective, it is doing so many things so business is de-risked. At the same time, you want to be in power and you want a trustworthy company, then Tata Power kind of fits your criteria.
But no real prospect for explosive growth here, because, and I'll just put the figures up. Last 5 years, revenues only compounded at 13%, PAT only at 7.8%. Return on equity has been better the last couple of years, but 8.5, 9, 10% or so is not, it's not too great. It's a very stable company, but I suppose that's the trust premium of Tata.
That's right, but they have ambitious plans, and they are again focusing very heavily on non-renewable, on renewable power sources, and gradually expanding their thermal capacities as well. So I think that it's fairly valued. But as I said, I think, within the power space, you want to buy the market leader, the private sector, then you go with Tata Power.
So let's come to the other side of companies that are darlings of the market, at least in the power space, the Adani Green and Adani Power. So could you break down what exactly they're doing? Because we know Tata Power is integrated, multi-plant, multi-method of generation, distribution, transmission. Tata Power is everything. What is Adani Power and what does Adani Green do?
So Varun, Adani has really shaken up the entire power industry per se. And Adani Power is the largest thermal power in the private sector. And Adani Green, the other company, is the complete market leader when it comes to renewable energy, be it wind or be it solar. And they're integrating the operations on the renewable side completely, right from manufacturing the solar panels, and now they're going to get into even getting into wind turbines and whatever is required to generate on that side. So Adani Group has been a solid player in the power sector, and the thermal power, that particular Adani Power, is a stable company with reasonable valuations and like a power utility. And I don't think that growing the thermal capacity is the focus of the group. But yes, it is required to act as a backup for renewable energy. And its company is like on a steady state. But the massive growth is coming in Adani Green, which is implementing some of the world scale renewable power plants, be it in solar, be it in wind as well. And they are driving the increase in capacity in this very critical segment of the power industry. But valuations are crazy. And that's something which investors need to be aware of. Although Adani Power is valued like any other utility company, it's reasonable valuation. Adani Green is quoting at a P multiple of 100 times or so. And no doubt prospects are good, but I think a lot of it is captured in the stock price. But it's an evolving scenario. And every now and then, Adani Group is acquiring a power company or announcing large expansion plans. So we don't know exactly where things will actually settle down 1 or 2 years from now. But they know how to, manage the entire ecosystem. They know how to manage the government regulation around it. They have been very acquisitive when it comes to this particular industry. And as I said, they are going more and more into expansion. So that certainly, I think, is something which investors need to keep track of.
So one to watch,
I'd say exactly. But valuation, when they're comfortable, then one could look at investing.
Right. Let's come to the final two segments in the private sector power companies, JSW Energy and Torrent Power, and sort of fairly different pictures, because JSW Energy, at least if we look at their top line and bottom line, really no growth over the last 5 years, 2.5%, really nothing. But Torrent Power has been growing, at least relatively strongly speaking, for power companies with a top line growth of 14%, PAT growth of 19%. So tale of two companies. What's the story there?
See, Torrent Power also, like Tata Power, is into generation as well as distribution. So that's an advantage. Distribution businesses, they're like the touch point for the customer. And there's a decent amount of profit in the distribution business. Adani also, by the way, is into distribution business as well. So they are running transmission. We have to cover that as well. But they're across the board in different companies. Torrent Power, thermal plant, distribution, expansion into renewable, but not a very aggressive player compared to some of the other players. JSW, on the other hand, a very aggressive player in the power sector, and they have got some fabulous, ambitious plans as far as renewable energy is concerned. And it started off as a division of JSW Steel and it got spun off. So thermal power came into JSW Energy, and then the entire expansion is into renewable, in the renewable space. And they have got good execution skills as well. And government wants to promote renewable energy. So from that point of view, there are very few players in India which can actually carry out massive scale of renewable power plants, be it wind or solar. So I think JSW benefits from them. The group is per se has got deep pockets. They can raise money. They know how to do acquisitions. So I think when there's a lean period in the power industry, company like JSW can be very acquisitive and grow its assets very quickly. And valuations right now are on the higher side.
Yeah.
No doubt because of the group's reputation.
So just again to just highlight that point. So as against Torrent Power, which is a valuation of 31, JSW is valued at 50, which is even more richly than your Tata Power. So certainly, I would suppose the street believes that their expansion plans must be credible.
Absolutely, and they are credible. And JSW Group has an excellent track record in execution of large projects. We've seen what they have done on the uh, steel side. It's India's largest steel company among the big global players. So from that point of view, people are very upbeat on the capacity of the group to execute large projects. And mind you, projects like power plants, setting up power plants of a scale of 1,000 megawatts and beyond require a different skill set. It's not everybody's cup of tea.
Fair enough. So I just want to summarize this thing because, when we look at other industries, there are clear winners, there are losers, there are, these guys have this mode and these guys have this mode. With power, it seems like if you can build the capacity, you can manage the regulation, you can sell it. And I look at these companies across the board and they're all in the same ballpark of growth rates and margins. And it's not like there's clear winners or losers, unless I'm mistaken.
That's right. But what will happen in this segment is that these companies will have volatility in earnings. So the quarters in which power plants get commissioned, you will see a spike in profits. Then it will again stabilize. Then if there's some government regulation, some curbs on pricing, then it will come down. Sometimes market forces come into play, and a lot of these power companies are doing free sale. Means they've got a particular, some part of the capacity is kind of locked into at fixed prices, and then some capacity is available for free sale. Free sale prices are there on the exchanges and they keep on fluctuating. So from that point of view, you have to be prepared for earnings volatility. And I feel that whenever there's a high degree of earnings volatility, you need to buy these stocks cheap. And none of these stocks right now are really cheap. They have run up significantly, and they're not at valuations which were there 1 or 2 years ago. So from that point of view, I'm not that upbeat on the power sector, although the long-term fundamentals are excellent.
So given the volatility, does this sector and do these stocks have a place in the portfolio for long-term investor, or is this more for an active trader kind of a space?
Oh, nice question. Traders would love this stock because there's volatility in earnings, there's volatility in government policies, and these companies are all the time in the news announcing projects, discussing the progress, and this entire renewable energy has captured the investors' imagination. So yes, great for traders. But from a long-term investor's point of view, entry price is important. And I don't think these companies are bargains at these prices.
All right. Well, I guess on that valuable note, we'll leave our viewers with that to think about and decide what they want to do with this sector and these companies. Thank you so much for joining us.
This podcast is produced by Elixir Equities Private Limited, a SEBI registered research analyst. Registration number INA00004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.